hourly candle forms. Do you guys watch how the hourly candle forms? The hourly candle forms. The first 15 minutes, it has a hard pull to the current direction. The next 15 minutes, it consolidates. The 45 minutes in, we get the real direction of push, and then sometimes at the end of 15 minutes, depending on where we are in the session, we're gonna have a huge pullback or we're gonna have a drive to the lower low. So that's how you have to watch your candle patterns. You have to say to yourself, okay, if that's where we're going, this is what I can take advantage of. So then you're watching the 15, 5, and 1 minute charts to see if we can get movement there.
Sorry, Ted, could you repeat that again regarding the 15?
So in the hourly candle, your first 15 minute usually has a setup. That's where we get the wick, right? Because if you your hourly candles, each candle has a wick usually on it. Your first 15 is where you see that pullback. The second 15 minutes is where you see a little bit of consolidation and a little bit of a drive down. The third 15-minute candle is probably the most important candle because that actually gets you that big push. And then your last 15-minute candle, you'll either have that continuation of that hard push down, depending on where we are in the session, or we're going to get a pullback to set up the next candle, like almost like you get that wick fill for the next candle setting up.
Okay, thank you. That explains a lot. It's good to split an hour candle into 4 small trades.
Yeah, because if you can anticipate that, if you can understand what the candles are doing within that major candle, you can then decipher, okay, more than likely there's going to be a wick fill coming in the next hourly candle, right? Because the hourly now is pulled all the way back. Because you saw the last 15 minutes, we pulled back, say, 5 or 6 pips. So now you know that there's a wick fill coming. But more importantly, you can also gauge your trade and say to yourself, okay, if I know that we've tapped like that bottom support, and we like if you look at this candle right now, we've tapped this bottom level, right? More than likely we're going to break and we're going to go to that wick fill. But at this point, if you look at where you are in your hourly candle or your major candle, you can turn around and say, okay, I want to exit because I know that we're going to have a pullback a bit in this hour, like as the hour comes to a close, and then it's going to do like that arch again to go back down, right? So you can see the 15-minute candles, they always arch around. So you saw this candle arch all the way around, so it's dropping. More than likely it will arch again and then continue to drop. But then you also gauge where you are with your major support levels.
But the most important thing is that, like, okay, if you're saying that this 4-hour wick will get filled, that's when you're looking at smaller time frames. Okay, if that wick will get filled,
how is it going to?
Yeah, where am I essentially looking at the small time frame to enter a safe trade?
That's right. You're not taking a trade on the 15-minute time frame or the short time frame when we still have bullish momentum in that case. So you saw there's like 3 15-minute candles that have bullish momentum. More than likely we're not looking to take trades. You have to wait for those candles to switch, and you may have to wait 1 15-minute candle before you get confirmation that we're dropping back down. Like see right now, like I would wait till we hit, and then basically where you exited the trade, that's where I would exit. Because now we've tapped that wick fill basically. It'll probably fill again, but what you'll see is this arch will start again. So you'll see that now we're going to consolidate a bit, and there might be an arch, and then we're going to drop back down. But you have to be aware of your candles. Too many people are saying, oh, wick fill, but there's nothing to support the wick fill. And what I mean by that is your shorter time frame candles aren't giving you that same direction. They're still pulling back. So people get caught in that because they see the trade. Like we visualize exactly what was happening. Because I said exactly what was going to happen is, I'm targeting that wick fill on the left, right? So I know that that's where we're going, but I have to wait for the charts to catch up to what my thought process is. That's the most important thing you have to figure out when you're trading is you can see wick fills all day, you can see support levels all day, but if you're not getting the confirmations with the shorter time frames, it's not going to happen. So you have to make sure the trade is valid. You can't just say, oh, wick fill on the 15 or wick fill on the hourly. If the smaller time frames don't give you the confirmation, you have to wait for those confirmations. And that's where you'll sit in the 15-minute time frame and you can see what's happening right now is you sit back and you wait and it's like, okay, now we have bullish momentum again for the last half hour. It's now what you say, okay, I have to wait for bearish momentum again to continue to get to my target. And you know it's going to come. You just have to wait for it. You can't, and that's the patience part of trading is saying, okay, I know what I want, but I have to wait for the candles to line up to say the trade is now valid again.
Ted, can you say, is it the same thing when you place a trade on a 4-hour and then you knock it down to just 1 hour if you just don't want to go down to 4 hours?
Yeah, it's all the same. All candles move the same. So like when people talk about swing trading and they talk about scalping, it's the exact same movements. It's just what time frame are you looking at, and then what are your goals, right? And then you have to place your appropriate stop loss and take profits.
Thank you.
So essentially, what's happening is like if you're looking at the chart and you're determining, okay, if we're going up, then you're saying to yourself on the higher time frame, this is where I think it's going to go.
Correct.
Yeah, and because I remember like one time you said this to me and you're like, well, all I do in trading is all I see is okay, this is the place where it's going to go, and then I just place my trades, and if it goes there, we make money. That's stuck to me. I'm like, okay, perfect. You just have targets.
Yeah, you just have targets, but you have to put yourself in a position to make sure that you enter with the proper when the target is when we're moving to that target. Like just because we have the target in mind, it doesn't mean we're going to hit it. Like, and that's the biggest thing that we have to stress to everybody is you turn around and say, okay, you have to make sure that we're going towards that target. Because if you saw that wick fill right now, we saw that wick fill. If it wasn't valid yet, it might take another 4-hour candle or 2 4-hour candles for it to become valid again. Like that's what I'm looking at. Is I'm looking at saying, okay, if we're going to fill that wick, right now we have a lot of bearish momentum, so more than likely we will, but we're never going to drive right down straight. Like you're never going to have one huge candle that's going to go with 50 pips. It's always going to be that sort of staggered, almost step pattern where we pull down, retrace, and we continue moving down. You can see the way the candles are formed here. So that's what you're doing is you're saying, okay, where do we see on the charts, like where are we moving right now, and where are those wicks forming, so that we can say, okay, if we go above a certain wick, more than likely now we're changing direction and we're going now to a bullish momentum. So that's what you're doing is you're setting your stop losses above certain wicks to say, okay, if we move towards that level, then more than likely we're now changing direction. That's what you're putting your stop loss for. It's to protect your capital, but it's also say, hey, if we go past this level, more than likely we're going the opposite way.